Okay, Chapter 7, Credit Cards and Consumer Loans. So this is the beginning of our study of credit. Credit is how you handle credit and how you utilize it are as important as, if not more important than any other part of you're dealing with your personal financial matters. So learning objectives distinguish among credit cards and other types of open-end credit. Manage your credit accounts wisely. We distinguish among the sources of consumer installments loans. Some sources are much more desirable than others because they offer significantly lower rates. Be familiar with different types of installment loans. Then finally, we're going to calculate interest and annual percentage rate on consumer loans. We're going to calculate them on three different kinds. There will be an Excel example published shortly. There are other examples in under modules in the material for exam 2. So to do, make a list of all your current debts outstanding, how much you owe, who you owe them to, and what the rates are. Move credit card balances you have to lower interest rate accounts. Don't make convenience purchases on the accounts which you carry a balance. One of the worst mistakes you can make is buying perishables with credit. For example, buying groceries with a credit card and carrying a balance. If you're going to carry a balance on something, you want it to have a useful life, a significant useful life. Pay all your credit card balances in full each month. Use your student loans for direct education expenses only rather than to pay for living expenses. Choose installment loans based on the lowest annual percentage rate, or APR, rather than monthly payment, number of years to repay. One of the worst mistakes car buyers, for example, make is going in and to the dealer and telling them how much payment you can afford. They'll find something, but it certainly most likely won't be desirable, and you'll end up paying a considerably much larger amount of interest, and you likely get a lesser vehicle. Open-end credit. The account is open in advance of the transaction. Borrow up to a specified credit limit. You have a monthly minimum payment at the end of the grace period. On credit cards, that repayment period is typically 10 years. Previously it was up to 20 years, and but still you don't want to be paying 18% interest or 21% interest for any longer than you have to. Finance charge is interest based on the balance for the billing period. Also includes any fees that might be involved. Special open-end credit. Service credit is granted to consumers by public utilities, physicians, dentists, and others. So you go to the doctor, less so the case now, but used to go to the doctor and you'd receive a bill, or the dentist and so forth. The public utilities, they bill you after the fact, and then you pay them. Travel and entertainment cards, they're issued by non-banks. American Express, there's also Diners Club. Difference being is you pay the balance in full each month. So common open-end credit, the two types of organization that issued open-end credit: retail sellers, such as Lowe's, Exxon, so forth. Kohl's card. You can, more and more these cards are becoming traditional, very much like bank credit cards. They'll be a MasterCard or a Visa. Bank credit cards, J.P. Morgan Chase, Citibank, so forth. They issue them. The transactions are usually processed through Visa or MasterCard, but the bank is the actual lender. We'll start the next lecture with possible features of credit cards.